M&A deals hit a 20-year low in the first half of this year, with 16,663 deals announced. That's according to Mergermarket. Despite that, deal volume actually rose up to 25% to $2 trillion, buoyed by a flurry of mega deals across U.S. tech, Chinese banking, and Japan's auto sector. Let's discuss this in more detail with our next guest. She is Lucinda Guthrie, head of Mergermarket. Lucinda, good morning. Great to speak with you again. First and foremost, I just would like to address the elephant in the room to some extent when it comes to M&A so far this year. I was wondering whether there's actually a number that can tell us by how much geopolitics really have impacted M&A so far this year.
I think the number is there. The deal volume has boosted because of those mega deals that were able to better cope with the uncertainty, and also that we're in key sectors that are going to transact regardless of geopolitics. But you pointed out that the actual number of deals is down to a multi-decade low. It's 16% lower than last year, and last year we already had those larger transactions coming through, and it's because after Liberation Day, indeed, a number, particularly in the mid-cap, that is where the companies really struggle to work out, what do tariffs mean for my business? What does this, how do I transact? How am I going to move forward? What's the impact of this? And obviously the prolonged uncertainty has been a real problem for a number of businesses. That said, we have started to see some transactions move forward, processes start to move forward in May, but it was a real shock to the system in April.
I'm also wondering, where do we go from here? Because I had a guest in the show a couple of weeks back suggesting that geopolitics has to some extent become such a big part of the rationale for the investment community, that at one point investors could actually put that aside and just becomes to some extent another issue that they have to deal on a daily basis. And that perhaps could actually boost the deal making for the rest of the year. Do you agree with that chain of thought?
I've actually been hearing a very similar pragmatic approach. People are saying there's never going to be a golden moment of stability. So we might as well get on with things and transact now. We're looking at people who are thinking about different structures and how can I transact in this environment. Obviously, we've got the end of the 90-day pause coming up in just over a week. So we'll see how that impacts the market. But cautiously, people are expecting an uptick in September because there is a lot of pent-up demand. Remember, everyone was so optimistic going into this year. We were expecting this huge flurry of deals because there are a huge number of private equity exits that need to transact. Rates were coming down, but this uncertainty has been a problem. So people are trying to be pragmatic. We are seeing processes now, and we're hoping that in the kind of back to school after the summer period, we'll see some more activity.
I have to get your thoughts also on one of the biggest rumors perhaps in recent times, looking at BP Shell. I'm wondering what you can tell us around the likelihood of seeing potentially a deal in that space, and what, perhaps more broadly, what is the outlook for deals in this particular sector?
Well, BP and Shell are a really interesting combination. We have to remember that we've been hearing talks about BP and Shell potentially combining since before I even started reporting on M&A. 2004, I think, was the first sign that they actually had initial talks. And I think there is a very big difference between two companies who have known each other for a long time thinking about what a deal might look like versus an actual transaction. So we have seen these indicative talks a number of times. I think politically it would be better for a Shell BP combination than a US buyer buying BP. You've got BP under a huge amount of pressure. Shares are down, I believe, 20% from last year. Suffering with the oil price. There's an activist investor, Elliott Management, which is pushing for Shell to cut costs further and also sell out from some of the renewables assets, focus on oil and gas. BP has put in a good plan, but some investors are saying that has to happen faster. So there's a question over if oil stays at the same level it is for a long time whether that could encourage activity. The other thing to bear in mind is that Shell has now got a no bid, it's got no intention to bid statement, which means it can't bid for another 6 months for BP unless something changes dramatically. So if there were a US buyer, for example, that could encourage some activity there.
So perhaps not yet the end of the story. Let's see what will happen and what the companies will choose to do. In the meantime, I also would like to get your thoughts when it comes to perhaps one of my favorite topics, which is consolidation in the banking space. I'm wondering whether, after we've seen UniCredit really struggling with domestic pressures to close on some deals, we're seeing the same in Spain between BBVA and Sabadell. I'm wondering whether the outlook for deals in the banking space is actually changing and becoming a little bit darker and sour given these challenges in the domestic front.
Do you know, I actually think we need to take a leave. I think anyone thinking about a banking deal in Europe, cross-border, needs to look at Novo Banco in Portugal, Portugal's good bank. And if you look at that cross-border merger, how that's been approached in a very friendly way, that's received the government's backing. Whereas you look at UniCredit, it's been more of an aggressive approach, BBVA, Sabadell. And I think that what we have to bear in mind is that these cross-border mergers, often the domestic government is going to be looking at how does this play out for my electorate, because banks are seen as this, almost like a utility, and they have to be seen to protect and make sure that the banking deal is in the interest of their voters and make sure there's domestic lending. And I think we also saw signs of that with the golden share in Italy on the BPM transaction. There is really a focus that these deals can't just be about scale. It also has to factor in, lending to, to customers.
I guess perhaps the difference there would be that Portuguese banks are already under a lot of external capital already. So perhaps the political pressures were a little bit different. But we have to leave the conversation there. We appreciate that you joined us today. Lucinda Guthrie, head of Mergermarket.